Hi, everyone, and welcome back to Comp Talk. Todd Tams here. I want to thank you for stopping by, and as a friendly reminder, remind you of the schedule that we have here at the Comp Effect podcast. Every Monday, we release an hour-long podcast with people in the industry or business owners or HR professionals that can share some of their business tips. And I know next week's episode, we are talking about bringing health and wellness to the trucking industry with Mark Manera, a fantastic guy that's trying to change the health and fitness of truckers. And by changing their health and making them healthier, it's not only going to have a more positive impact on employee safety, it's going to lower workers' compensation claims and probably do great things for the company overall. So that's next week's podcast on April 26th. And then on Thursdays, we drop tidbits of information on various things that are really workers' compensation related. And so today, what I wanted to talk about was, should your business move or cancel the workers' compensation policy in the middle of a policy term? And the answer to that, so what I mean by that is, if your policy is effective January 1 to December 31, should you cancel it and go with another insurance company in the middle of that term? And the answer is maybe, maybe not. You have to do your own due diligence. So there's a couple things that should go into the thought process on whether or not this is a good fit for your company. So the first thing we want to do is look at the premium size of your company. Generally speaking, if you're not over $3,500 in workers' compensation premium on an annual basis, you are not going to have a workers' compensation mod, so the experience mod will not come into play. If you are over that and you cancel your policy midterm, it may affect your future workers' compensation experience mod. And depending upon your previous loss history or your losses that year, it's going to determine whether that might be a good move or that might be a bad move. Now, there's some software out there that will analyze this and help you make a decision. And that software, we use Mod Advisor. That'll go out 2 or 3 years in the future, and you can kind of future forecast what that mod is going to do. And so, for example, why would that be a bad idea? Well, for easy or simplistic purposes, let's say we're running a calendar year mod. And let's say we've got a policy that runs January 1 to December 31st, and we're in the first 5 months of that policy. And we just had a $100,000 workers' compensation claim. In a normal policy year, that claim, that estimated versus actual claim factor that would go into there, and this is going to get kind of technical, would be based off of 12 months of payroll. So your 12 months of payroll is going to have a higher expected claim factor than 5 months of payroll. The factors are the same, but there's less payroll, so there's less expected claims. Now, when that happens, your actual claim, that $100,000 claim versus expected claims, is going to skew that number, and it's going to skew it higher, and it's going to move your mod higher. So that may not be advantageous to you. And you may not see that till 18 months down the road. Your workers' compensation experience mod, it can be based off of, I think it's up to 51 policy periods. So you may have a mod that now lasts for 18 months. And if it's an inflated mod that the insurance company has to use, that's going to inflate your premium. So always do a mod audit when considering whether you should move into a new carrier midterm or not. The other thing that you want to consider is, and I just drew a blank here. I was just on it. Okay. The other thing you want to consider is the short rate table. So depending upon your premium, you may want to run an analysis to find out what your short rate cancellation penalty will be if you leave early or midterm. And the easiest way that I can explain it is, an insurance policy is kind of like a bank loan. It's front loaded, and then it's not front loaded toward the end. So it's kind of like interest, like you pay more interest at the beginning of a loan than you do at the end of the loan. Same thing with insurance companies. There's an assumption that your company is going to be with that insurance carrier for the full 12 months. And when you leave early, there's a penalty. Now, that penalty is based upon a table that is used or produced by a company called NCCI. So it's pretty easy to calculate exactly what your penalty is going to be on the date that you leave. So after you calculate the penalty and after you do the mod audit and you get those two factors, you need to find out and look, does it make sense to move? And so it may, if there's enough premium savings that are being brought to the table, that it makes worthwhile to switch. If there's not enough premium savings there, then I would not do it. Maybe you're going to leave for better claims experience. Maybe you're unhappy with the company. Maybe you don't care. But if things are going good and that's not the issue, and there's really no reason to leave, you may not want to do that. So long story short, once again, do the mod audit, find out if it makes sense. Is your mod going to swing up 15 points? Probably not a good idea. Is it going to stay the same? Maybe not as bad. Do the short rate calculation, find out what that penalty is going to be. Take those two numbers and compare them to maybe the new proposal that you've received and find out if it makes sense in that scenario. If it's a 30 or 40% savings, there's a good chance that 30 or 40% savings that your company is going to see can easily outweigh the mod factor and the short rate penalty. But I don't know. So I guess once again, kind of like our last podcast, buyer beware, do your own due diligence, do your own fact checking, make sure it's in the right interest of your company. It may be, but you got to do the work to prove it. And there are certain ways to do that. And it can be laid out via pencil paper and shown and calculated so you know exactly what it is that you're going into. Once again, thanks everybody for stopping by. I appreciate you guys being here. I appreciate you guys listening. If there's anything that you need answered, by all means, please let me know. Look forward to sharing more content and more information with you in the future. Have a great day.